back. You're watching Markets at Noon on ET Now, and let's connect with the management of Mahindra Holidays because they also had come up with their numbers and they posted a consolidated loss of about 13.7 crore rupees versus a profit of about 13.3 crore rupees on a year-on-year basis. The margins have, however, seen an uptick on a year-on-year basis. 14.3% versus 13.8%. So has the total income risen on a year-on-year basis. So let's understand what exactly transpired in the quarter gone by with Mr. Kavinder Singh, who is the MD and CEO at Mahindra Holidays and Resorts India. Very good afternoon to you, Mr. Singh. Thanks so much for joining us on ET Now. And let's talk about what exactly happened and why did we see the consolidated loss, given the fact that we have seen travel momentum picking up. If you could take us through the one-offs that's impacted your quarter, as well as how do you see the margin shaping up going ahead?
First of all, I want to share the good news that this is the best ever quarter that we have had in our history at a standalone level. And let me just take you through that a bit and then I'll come to the one-offs. If you really look at our resort income, it has grown by 30% in this quarter YOY basis. If you look at it in the 9 months basis, we are 80% up. If you look at our total income, that's grown by 18%. And if you look at our EBITDA, as well as PBT, both have grown by 17% on YOY basis at standalone level. Even at a consolidated level, actually, if you look at the PBT level without these one-offs, which you mentioned rightfully, we have actually doubled our profit before tax. Even if you were to look at on a 9 months level, we are up by 90% on the PBT without one-offs. Let me now spend 30 seconds on one-offs. The one-offs are basically non-cash one-offs. They are largely caused by the forex movements. We have a forex euro loan, which we had used to finance the Holiday Club Resorts, the company. Since the asset underlying is a euro asset, there is a minor movement as a result of the fact that we have a euro loan exposure, which has resulted in the consolidated number that you alluded to. So really speaking, the operating performance and talking about margins, which you mentioned, we have delivered the best ever margin at a standalone level at 29.3%.
So how has Holiday Club Resort performed? What is the outlook for occupancy of growth over there?
So as far as the Holiday Club Resorts is concerned, the quarter 3 is a low season quarter. Neither it is full winter, nor is it summer. So therefore, the quarterly results of actually quarter 3 represent the seasonality aspect of the business. Holiday Club has 2 very good quarters in a year, and that makes up for everything, which is quarter 2 and quarter 4. Quarter 2 went well. Quarter 4, the occupancies are already very healthy. Even in quarter 3, by the way, the occupancies were very healthy at about 56%, much higher than the local hotel market. And timeshare sales, as well as the spa hotels, which we call them, their turnover was about 4% up. They were hit on the profitability, largely due to the spike in inflation caused by the geopolitical situation.
Right. Mr. Singh, the company has added 80 keys to the existing inventory. If you could tell us what are your long-term capex plans and also are you adequately funded for it?
The good part of our business is that we have free cash of about 1100 crores. And as we speak, we have plans to invest about 1500 crores over the next 3 to 4 years. We will generate 1500 to 1800 rooms with that kind of investment. And we do not need to borrow because we have, as I mentioned, cash on our hand. And we will continue to generate cash. As I told you, our operating cash generation in the 9-month period has been at a very healthy 377 crores. So we really don't need to borrow to go ahead with our growth plans.
So can you talk to us about the capex as well? How is the company planning to acquire properties, add inventory? What kind of acquisitions would you be looking at? Are you in talks with anyone? Can anything materialize soon?
So as we speak, the acquisition processes are on. Difficult to say which one will materialize, which one will not. Obviously, in line with the core growth strategy that the board has outlined, and which is what we are executing, is that how do we really create a footprint of resorts which ensures that the Club Mahindra members get diversity of experiences, and equally we are able to create momentum in our member growth. So the objective is to get very, very dominant in the leisure destinations. We are known for creating destinations. So we will have a multitude of strategies. We will not only be acquiring, we will also be building. As we speak, we are building in 3 sites, adding up to about 350 rooms. Very soon, we'll be breaking ground for another 300 and 350 rooms worth of investments, which includes a greenfield and a brownfield project. So our idea is to have at any given point of time 700 to 750 rooms under construction, and that is something that we will do apart from acquiring. Of course, leasing always remains an option, which we do when we take resorts on lease and which we manage ourselves by refurbishing the resorts to our specifications.
All right, Mr. Singh, we leave it there. Thank you so much for joining us on the show, talking about the quarter gone by for Mahindra Holidays and where do you see it headed from here on. And that was the MD and CEO of Mahindra Holidays. Now, from one earnings to another, from one management to another, we have the management of Thomas Cook joining us on the show.